Morning, market chameleons, and happy Wednesday. How you doing, Dima?
Good morning, Will. How are you?
Great. Hump day.
Oh, yep.
It's middle of the week, buddy.
Sorry.
What are you seeing?
Over my shoulder. Nothing. I was just updating some of my other screens over my shoulder.
People were asking, do you get a new line of hoodies for the holidays?
Oh, yeah. You know what? I don't know. My wife actually, she likes buying these hoodies. So I have I don't know, 20 of them.
Yeah, Mike was noticing just the other day. He mentioned, did you get a new hoodie for the holidays?
Yeah. I don't know why she all of a sudden she liked that style and started buying a bunch of them. So I just have 20 hoodies now.
Yeah, they look good. They look good. All right.
Usually I like the collars, but
yeah, no, the hoodie's a good look. Yeah. Let's start with the disclaimer. What do you think?
Yep. Good morning, everyone. Thank you for joining. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer, everyone.
Excellent. What are you seeing this morning, buddy?
Let's get started. Let me share my screen real quick. And I'm thinking today, we'll see what's moving in the pre-market hours. I also wanted to cover, we started out with some new reports that I'm working on. They're not yet available. We didn't push them out because I'm testing them out. But basically, it's trying to use the fundamental and financial ratios to get a sense of where the implied value would be if stocks reverted to a longer term mean. So we'll take a look at that. I also wanted to cover, maybe we'll take a look at seasonality chart in QQQ, the implied volatility. And if we have time, we'll take a look at some bullish, bearish trade ideas, option ideas. And of course, if you have questions along the way, let me know. I'm going to try to answer as many questions as we can. So with that, let's get started. So these, right now, we're looking at the pre-market report. These are stocks actively trading in a pre-market hours. We have the most active stocks, biggest percentage gainers in pre-market, biggest percentage decliners. I'm going to use this filter really quickly to see what's going on in the higher market cap stocks. So I'm taking market cap, doing 20 billion market cap or higher. So we see here, there's 26 made our percentage gainers list, nothing on a percentage decliners list. So at least from that perspective, looks like a more favorable bullish opening than bearish. I see not a lot is jumping out at me right now because there's not a lot of volume trading. Maybe Alibaba, 500,000 shares in the pre-market hours, up 3%. So that's kind of bouncing back after being down a lot this week. I'm going to show a different report you could look at pre-market. Usually we stay on this report, but let me show you a different way to look at pre-market movers. And if you go to the home page here, there's a news scanner right here, right besides the trade ideas. You could come over here to the news scanner, and this lets you look for stocks that are moving into pre-market hours or during market hours and see what kind of press releases are being issued by companies. So let's take a look here. You see here, I'm going to switch this to pre-market movers. So switch that tab. And these percentages here are the moves in the pre-market hours. So up here, MARK, right now it's trading $1.91 in pre-market hours. That's up 2.1% from yesterday's close. This is its market cap, 185.9 million. And then there's some news out here. So this is the headline news, and you could just read it really quickly. And this is a way to see what's moving, and you see the right there, the news article just came out, what the press release is. So you get to take a look at the catalyst behind that move. Let's take a look at, I'm going to use some of these buttons down here, like quick buttons. So let's look at bullish movers. And right now they're all sorted by the most recent report. So you see here the most recent press release. So this one was like 4 minutes ago, 9 a.m. Here's one 8:30 a.m. But we could sort any of these columns. So I'm going to sort by percentage gainers. So you see here INDO, that's up 140% in the pre-market hours. That's $11.11. It's a small cap stock, 34 million. But over here you see there's some news today. Oh, sorry, that's from December 28th. So this is going back, up to 2 days. So that's not today's news. IPDN up 55%. This was the last press release that we had. Again, that is from this morning, 8:20 a.m. And if you want to read it, you just click on it, and then you can kind of go through and read what the press release is to see what the catalyst behind the move. NTE up 41%. Looks like they released two different press releases, or 3 of them actually. Let's filter this down further. I'm going to take a look at, let's look at S&P 500 stocks. So I'm going to filter by S&P 500. So one made the list, PYPL, up 1%. And there's a press release over here. May or may not be related to that move, but at least it's right there in front of you. Let's take a look at NASDAQ stocks. So right there, 3 of them made it. PayPal's on there again. JD, that's Moderna, biotech stock. So that's up 2.4%. Again, really quickly, that's just to narrow down what's moving. You could do it by your watch list. You could select all my watch lists or any one of your watch lists. Let's see if anything in my auto manufacturer. No. Big data stocks. Nope. All right. So that's that. Really quickly. Again, you could do it by keywords or just a particular symbol. You could look at it. Or let's take a look at any. So these are all the press releases right now. I'm going to sort them by time. Let's take a look, maybe if something in Apple. Nothing in Apple. Facebook. Nothing in Facebook. So, again, you could just find by symbol, really quick way to scan for news. Bearish movers, you can click on here. So these are stocks in the pre-market. Remember, I have them set right now. Stocks that are moving in pre-market. These are some bearish movers here. BOCSC down 21%. This is low cap stock, but here's some news on it over here. They're having like a secondary offering. Let's see if there are bearish movers in the higher market cap stocks. Let's do above 10 billion. So AES down 2.1%. Let's take a look at bearish movers. Let me take a look at healthcare. Let's see if there's bullish movers in healthcare. So here I have, did I reset that? So nothing in healthcare. Again, it's something I don't show every day. We usually just stay on that one pre-market list. This is just a different way to look for pre-market movers that also have some press release issued by the company. And you could use this actually throughout the day. And I think if you have keywords, specific keywords that you're looking for, like for example, let's do like secondary. So secondary. So this will scan the keywords not only in the headline, but within the body of the text, and you could find it that way as well. All right. So if you're like maybe looking for something that announced here, like PDUFA, right? So these are biotechs. If they mention PDUFA, there you go. You have it highlighted here. There's the date. So you could really quickly scan it, get those news articles, and look up even like specific keywords that you're looking for. So that's one way to do a search. You could actually exclude keywords as well. Like if you don't want to see like class action lawsuits, you could just put that in exclude keywords, and it'll take those articles out. There are no questions, Will, on this. I'll move on.
No, just there was a comment by the GOAT this morning. He was talking about, I guess there were some large trades he noticed in SPY and QQQ. So if you get a chance today, maybe you could look at those, see if there were any. He said there were some large put trades he saw from yesterday.
Okay. Cool. Okay. All right. Yep. I'll take a look at those. Let's move on to, let's take a look at some implied value. Implied value ratios. We're going to take a look at financial ratios. I'm still working on this, so you guys are not going to see this yet. These are all in my test environment, but we're going to take a look at some stocks. Like I'll pick Nike. I'll take a look at here. Take a look at maybe like at least 4 stocks just for comparison. But let's start out with Nike, because I know we talked about Nike. They reported earnings. They're up a lot after earnings. Right now, trading $141.57. So let's look at its PE ratio compared to its 3-year average PE. We're going to take a look at the price to sales ratio compared to its 3-year average. And then what we'll do is say, what if Nike reverted to its average multiples, right? So that, what would it be priced at compared to today's price? All right, so that's what we're trying to see. Like, how far away is today's valuation multiple compared to historical? So here we see that Nike 3-year average PE 48.5. So if it reverted to that PE ratio, I'm not saying it will, but if it did, then Nike would be $85.83. The price to sales 3-year average is 3.7. If Nike reverted to that multiple, then it would be $88.93. So you could see right now, P ratio 79.98, price to sales 5.9. So both above its 3-year average. Another way we could take a look at it is, how is its multiple compared to the market? So we know that all the multiples are high. So let's do a relative comparison. So right now, current PE Nike 80, that the current PE for SPY, so that's the overall market, S&P 500, 30, almost 35. So Nike's trading at 129% premium to the market. Its 3-year average, let's take a look. 3-year average PE in Nike 48.5, 3-year average SPY 25.6. So on average, it trades at a 90% premium to the market. If it reverts to that, Nike's $117.12. Price to sales. Let's take a look at how that is relative to the market. So right now, Nike's trading 5.9 times its sales. SPY 2.8 times sales. So it's trading at 114% premium to the S&P, sorry, SPY. The 3-year average, Nike's 3-year average price to sales is 3.7. SPY's 3-year average price to sales 2.4. So Nike trades on average 54% premium to the SPY. If it reverts to that, Nike's 102. So if we just took these and just took the average of all these, implied values, we get $98.47. All right. We could also look at the median, which would be lower. 5-year average would be even lower, 87. So look at the 3-year, $98.47. Right now, $142. So this is how far away now those multiples are relative to its sales and earnings. Now it's up to you to decide, is that justified, right? Like, is not, maybe Nike's starting to grow, maybe they have new products. I don't know, you have to go in there and take a look and really analyze it, but that's how far away it is. So let's just take a look at what happened in the earnings. So here are Nike's last earnings. So you see here, they reported 78 cents a share. Expectations was 62 cents a share, so they did beat on that front. Revenues were 11.2 billion. The estimate was 10.6 billion, so they did beat on that front. You know, stock was up 4.9%. But let's just take a look at the growth. You know, like how fast are these earnings growing? So here we go. For the second quarter, right, that was the last earnings, they earned 78 cents. The previous year, second quarter, right? Wait a minute. Right. The previous year, second quarter, they earned 70 cents. So that's about a 10% increase in earnings. Let's take a look at the revenue. Revenue, second quarter, previous year, 10.3 billion. This quarter, 11.2 billion. So that's about a 10% growth. You know, we could take a look at the first quarter. They are 95 cents compared to first quarter, previous year, 86 cents. Revenue, they earned 10.6 billion first quarter versus 10.7 billion. So there it's pretty much in line, you know, the same, even though they did better on the earnings front. Again, these are things to look at. How fast is that 10% growth? Does that justify a much higher multiple? Did they say, again, you could go read what the notes of management and figure it out. But as you could see here, right now, much higher multiple than its historical average. And, you know, the more I look at these, the more, you know,
Don't say it.
I'm not going to say it. But if you're a value investor, it's very hard. You know, there are probably some out there, but I don't know if there are any value investors right now listening. And you tell me if they're finding any like great value deals. But then you have to have a leap of faith that, you know, that their earnings are going to grow a lot. Let's take a look at another one.
Well, a lot of people also say the market's forward thinking, and you're buying not today's earnings, but, you know, the earnings a couple quarters out. And, you know, we have been in a very, you know, everyone's been locked down. So Nike, for example, though, that being said, my son for Christmas got 4 pair, you know, that was all he wanted. He's like your son you were talking about. He's a shoe hoard. That's all he wanted. He had 4 different sets of shoes, and they all happened to be Nikes that he wanted. So people are still buying. I mean, I don't know about anyone else.
I don't know if they're as impacted as like some other industries. You know, it's not. They weren't impacted like, for example, like cruise ships or you know, movie theaters, or I think people still bought sneakers.
I would agree.
And you could see like they've been beating. So so that's Nike. Let's take a look at, let me see. Let's look at Netflix. So here's Netflix. Let me come back here. So let's take a look at the key ratios. Netflix, $531. Let's take a look here. So here's Netflix. So it's 3-year P ratio, 133. Actually, we skipped those. So we do take a look at the PE ratio. I don't know why that popped up. You know, again, this isn't my test, but when the PE ratios get silly or whatever, we don't count those in the implied value, you know, like 1,000 PE or negative P's. So this one wouldn't get counted. So then we default to price to sales. So if we take a look at Netflix price to sales multiple, 3-year average 9.5. If it reverts there, we're looking at $499 in Netflix. So right now, what are we at? Price to sales 10. So close, right? We're close to that. The earnings, it skips because they just have like high multiples. So we just go default to the price to sales. So here, price to sales right now, Right now, Netflix 10.1 compared to S&P 2.8 price to sales. That's a 266% premium to the SPY. 3-year average, we see Netflix 9.5 versus SPY 2.4, so that's a 295% premium to SPY. If we revert to that, we're looking at Netflix $572.80. So if we take the average of those, we're skipping this one, remember, that shouldn't have popped up. So we're looking at $536 implied value in Netflix, and we're close to that. So that's right around where the historical averages are. Let's take a look at. I would take a look at Microsoft. Microsoft key ratios. Again, 3-year averages. This is, if it goes to the 3-year average P ratio, we're looking at $232.34 in Microsoft. If it reverts to 3-year price to sales ratio, it's about $166.04. PE versus SPY. Right now we're looking at, it's trading at a 4% premium to the SPY PE, 36.2 versus 34.9. On 3-year average, it's been trading 39.5 versus 25.6, so that would have been a 55% premium. So if it reverts to that, we're looking at $317 on Microsoft. Price to sales, right now, 11.7 versus SPY 2.8. That's a 323% premium to SPY. 3-year average, 8.7 versus 2.4, 260% premium to SPY. So it's about $190.48. If we just took the average of all these, implied value, $226.47. And that's pretty much, that's kind of where it is here. So that one looks in line. Let's take a look at, you want to do Amazon or Tesla?
Tesla.
Amazon.
Or Amazon. Let's do Amazon. Actually, while you're looking at Amazon, it was funny. Pavel was not funny, but he was mentioning a stock that he's been looking at when you were looking at value stocks, and it's a Russian, the Russian Amazon. I think he said OZON. I'd never heard of it. I was looking at it. Not really enough data. It's only been in the marketplace about a year, but
yeah, we'd need more data. Plus, the foreign companies, those are a little bit harder. Right now I'm just sticking to the companies that report in U.S. currencies. Those other foreign companies, I've been looking at them, and sometimes I can't even make sense of like what's going on.
They have different accounting standards a lot of time. I mean, I know those. Yeah, that's been one of the complaints with the Chinese companies, and
exactly. Yeah. So with those are a little bit tougher. Let's stick with these now. Again, I'm still testing. I didn't even push this out because I'm still testing it and like going validating data and going through that process. So Amazon, $3,322. Let's take a look at that here. Average PE now. Amazon just tends to really trade at a high PE of 133. If it reverts to that, 4,566. I believe though we're skipping that in our average, just because those P's, again, once they get really high or weird, they're not as reliable, so we skip those. Price to sales ratio, right? 3-year average, 4. So if it reverts to that, 2,760 right now. Price to sales ratio 4.85. And this is PE versus SPY. We're skipping that because it just has very high PE, not as reliable. So we go default to price to sales. So Amazon right now, price to sales 4.9 versus SPY 2.8. That's a 76% premium to the S&P. 3-year average price to sales Amazon 4 versus SPY 2.4. So that's usually 68% premium to SPY. So that would be 3,167. So we see there, if we took the averages of these, about 2,963. So it's trading 3,332. So a little bit higher, about 10%. Let me see if we reverted it to a 5-year. So 5-year would be a little bit lower. 3-year median. So if we use the median, actually, sales. So here, instead of the average, because sometimes the average could get skewed a little bit if we use the median, we're looking at 3,398, which is like right around where it is, right around its historical implied value. Want to do Tesla really quickly?
That would make Jean very happy. She asked for Tesla.
Okay, so here's Tesla. So key ratios, Tesla, $671 right now.
Wow, seems cheap compared to NEO.
Huh? Yeah. So
that's an EV joke.
Obviously, right. Tesla P's are like right now. It's just basically based on just growing its revenue, right? So this P 958. I don't know. This shows up here, but it's not counted in the average. So let's skip that. 3-year average price to sales in Tesla 16.1. Right now we're at 24. So if it reverts, if there's a mean reversion, $444 on Tesla. P, skipping that. Let's take a look at its P versus the S&P SPY. So right now, price to sales 24.1 in Tesla versus SPY 2.8. That's a 772% premium to the S&P. 3-year average, Tesla 16.1 versus SPY 2.7. So on average, 494% premium to the S&P. If it reverts to that, $453. So we take the average of those. We're looking at, if it reverts back, $448. So this is just letting you know from that benchmark how far away we are. Let me take a look at the median one. Median, 465. Let's take a look at the 5-year average, 448, same. 5-year median, 465. So that's where we are now. Was there recently like a big short that started? The guy from I think I was reading an article, the guy from the Big Short movie, the movie Big Short, who was shorting the mortgages. I think he started shorting Tesla. If I'm correct, I think he was one of the ones that said that it's gotten a little bit out of control. So
hopefully it's deep pockets.
Yeah, exactly, because these things go up and stay up. Like, Will, I remember when Greenspan was giving the speech, Irrational Exuberance, and then the market after he gave that speech kept going higher and higher.
It can go up for a long time in your face.
Long time. Yeah.
Listen, we had some great comments today. D. Railroad Bob joining us from Alaska says he uses your the dividend screener every morning at 5:30 in Alaska, which is kind of cool.
Oh, awesome.
And he actually found us. I guess there's a guy called Adam. He has In the Money, and he found us there. And he's big shout out for Railroad Bob for joining us. And actually, I'm posting something right now. This is from I won't say who. Actually, if anyone guesses who it is, I will send you a Chameleon cup. But I just posted his comment from yesterday. He emailed me after, which I love hearing from the chameleons. And he said, per the morning show, my girlfriend is an eye doctor and signed up for a vaccine. Her appointment was at 2:30 today. There were 10 appointments set for every 2 minutes, and there was a line a mile long. We've been talking about people, are they going to get the vaccine or not? And judging from our show, I feel like, and I tell this to people, I feel like I'm the only maybe idiot who's going to get it. But I guess there are other people out there who will be getting it too. But the vaccine is going to be interesting because people are betting that everyone's going to take it, and I'm not so sure. So a little comment from a chameleon that I liked yesterday after the show, which was cool.
Awesome. Thank you. Really appreciate it. Okay. Well, we're up at 9:30. I'm going to let people go start their trading day. Again, thanks everyone for joining us. Hope to see you tomorrow. Stay safe. Have a great trading day.
Yep. And remember, tomorrow's the last trading day of the week, everyone. So stay safe and peace. Thanks, Dima.